Hello everyone, this is Sheila Shaffie and welcome back to ProcessArc's channel where we provide you with digestible business insights. In today's video, I want to wholeheartedly focus on one topic, which is how do you measure the performance of your business processes? Now, this is important because if we don't measure how our processes are performing, one, we're leaving things up to chance, and two, it's really difficult for us to figure out exactly where the opportunity lies. Now, I know companies measure a lot of different metrics, but they're kind of like accounting metrics. EBITDA, total revenue, total cost, net interest margin, percent efficiency, interest income. And these are all important metrics clearly to figure out exactly how the company is performing. But from a day-to-day perspective, they don't really help us as operations managers or owners of a business unit identify where we have opportunities to improve things, to increase revenue, or to help reduce expenses. So another way of saying is that those really high-level metrics have lower-level contributors to them that are in our everyday business processes. And if we could figure out how to measure those business processes effectively, we would know how to impact the top-level metrics. What I'm going to share with you today are the 5 metrics that we use to measure business processes regardless of the business unit that we go into. So these are my 5 go-to metrics to help figure out how is the business process performing today, where do we have opportunities for improvement, and ultimately, based on those opportunities for improvement, how much incremental revenue or cost can we take out of the business? The last benefit that you get when you start measuring the performance of business processes is that you can start then comparing the performance of one business process that you may have against another. And that's another beauty of having consistent metrics. Now let's get right down to exactly what those 5 are. So here they are: percent conversion, percent yield, percent rework, cycle time, and the cost of the work in process that you may have within your business. Now, in today's video, I'm going to focus on the first one. So I'm going to take one metric at a time and explain to you, number 1, how do you calculate it? 2, what data do you need to calculate those metrics? Take you through an example, and then ultimately, once we figure out or calculate the exact number associated with that metric, I'm going to show you how you can use that metric again to figure out how much money can you save and how much money can you make for the company. Okay, percent conversion, here we go. Percent conversion is a measure of how effectively you were able to convert one thing to another. So in this situation, I think of percent conversion as our ability to be able to take number of applicants for a life insurance policy, number of applicants for a car loan, number of applicants for a new bank account that they're opening. Think of just a prospect. How many of those prospects were we able to actually convert into a real life customer? That is what percent conversion is all about. It's looking at how effective we are at taking something that's kind of raw, that is perspective, into something that now we can tangibly make money from. Now let's apply it to a real example, and let's take the idea of converting a customer again as something that we can talk through for percent conversion, because converting customers is something that is industry neutral. In every company, everyone's focus is trying to figure out, of the total prospects that we have out there, how many did we actually convert into something that we can make money from and provide services to. In this example, we have 890 prospects, 890 people that we provided proposals to, and of that 890, 230 of them actually converted into real customers that have purchased policies from us. Notice that in the numerator, I've got the total converted customers. In the denominator, what I've got are the total number of customers that we were hoping to capture. So when you do that division, you end up with roughly 26% conversion. Now, I don't know if that's good or bad. That's ultimately up to your business unit or your manager or the leader within that line of business to figure out what exactly or what level of conversion do we need in order to hit our financial performance. But at a minimum, you know that, hey, today, based on how I've been able to capture the data, we're roughly running around 26%. Well, how do I know exactly how much money I can make, how much money I'm leaving on the table, and how much expenses my organization is bearing because my process is performing at a 26% level? Let's talk about cost and revenue now. Now let's talk about money. Let's use the percent conversion number and figure out what kind of opportunity do we have to increase our revenue. And the percent conversion essentially was telling us how many customers did we convert and conversely, how many customers did we lose. And to come up with a back of an envelope calculation for the amount of incremental revenue opportunity that we have, we can take the amount of customers the percent of the customers that we lost, multiply that by the annual number of customers that we issued proposals to, multiply that number with the amount of revenue that we typically earn per customer. So you're going to need the help of someone from accounting and finance to probably get the number associated with the amount of revenue per customer, but every single product within a business has a rough number associated with the profitability or the revenue associated with the acquisition of a new customer. So in our case, let's take the fact that we have roughly 74% of our total prospects lost to the marketplace. I take 74%, I multiply it by the 890 customers that I submitted proposals to, and then I take that number and I multiply it by the 50,000, which is the rough amount of money or revenue that I expect to earn from that customer. When I look at this number on an annualized basis, it's pretty astounding. That's $33 million of revenue that we could have captured some percent of. We can't capture every single customer that we issue a proposal or a term sheet to. That's not realistic. But the reality is that there is some incremental opportunity. That's why I'm using the word incremental, is because there is a chance for us to be able to nudge up from 26, maybe to 27, to 28, to 29. We can edge our way up. And for every percent increase in our conversion, that is roughly hundreds of thousands of dollars of revenue that we can capture for the business. So again, this is a way to take a number that's a pure performance number and translate that into something that is dollars and cents that is going to get the attention of executives and leadership within your business. Now, let's switch gear and talk about what does all of this mean in relation to cost. What does 26% conversion mean from a cost perspective or from a productivity perspective? To calculate the productivity opportunity or a cost reduction opportunity, we need two new numbers for this calculation. We're going to have to know the amount of labor cost associated with prospecting. And the other data point that we're going to need is the amount of time we spend on average, typically, in generating proposals or term sheets or, completing an application for a prospective client. So in this situation, we came up with something that the accounting department and the finance department was comfortable with, was about $150 an hour, and that we spend roughly 8 hours, that entire cycle of prospecting and working with the client and completing the application is roughly amount 8 hours of our time, our touch time, the amount of labor we apply in the prospecting phase of the business. So again, you take the percent of the lost customers, which is the 1 minus 26%, you multiply that percentage by the total volume of prospects that you had for a given year that you actually did something for, like issue a proposal, issue a term sheet. Roughly $150 an hour is what we compensate our people with. And then the process is taking 8 hours between the financial rep and their assistant to complete with the customer. So when I annualize that number, it's coming out to be roughly $800,000 of expenses that my company is bearing that doesn't necessarily result in any financial benefits for the company. And of course, in every business, there's cost of doing business. This is just saying, look, we're spending $800,000. That doesn't translate into anything. Is there any way for us to be smarter in how we do things? Can we reduce the labor that we apply in the prospecting phase? Is it possible for us to, use less expensive labor in parts of the process when it comes to trying to attract a new customer? All this is doing is just shedding a light to say, hey, you've got an 800,000 opportunity here from a cost reduction and from a productivity perspective. Again, these are kind of back of an envelope calculation, but they are incredibly powerful in being able to baseline your current performance level and highlight for you that, hey, if we are losing roughly 74% of our prospects, what can we do? What can we do differently? What can we learn about the people that didn't convert with us in order for us to become more productive and to capture more of that pie for the organization? So measurement is everything. Measuring business processes allows you to find the opportunities to do creative problem solving or innovation. Metrics, data, measurement is at the root of problem solving. I don't typically ask this, but if you be kind enough to subscribe and leave a comment and just tell us what are the metrics that you are using or which one you think you're already measuring in your business, it will be tremendously helpful. Thank you again, and I look forward to seeing you again next week.